Brent, you first. What is 2019 going to hold for these stocks? Anything better than what we're getting towards the end of the year when tech really fell apart?
I think everyone's in a wait-and-see mode. Obviously, valuations are getting pretty attractive at a number of these stocks, like Google trading below its EBITDA growth. So we think short-term, there's not a lot to do. We think most investors are going to wait now until January, February to see what the earnings outlook looks like. You've had a downdraft in the stocks, but you've had no real fundamental disappointment. So I think investors are still a wait-and-see off of February earnings. But I think some of these multiples for long-term investors are looking really attractive for both Google, even Amazon's getting attractive given the pullback that we've seen recent.
Some of these, Dan, have felt like falling knives. You know, when are they going to stop? When is sentiment around tech going to change?
I mean, look, I'd say it's apocalyptic type fear, especially in a name like Apple, in terms of what we've seen. That's why, I mean, to Brett's point, I mean, we've used some of the parts on Apple. If you take away the services valuation, which we with $400 to $450 billion in cash, you're getting the iPhone franchise for 1x revenue. So if that, in our opinion, is sort of a bottom in a name like Apple, you can still have bad news come out, but fundamentally, we view that it's definitely over their skis in terms of bad news, not just Apple, but across a lot of these tech names.
Although, well, I'm looking at 12 months. So I guess for the year, Netflix up 25% that's good. Why should we think of that as being a bottom?
I think you have to look at specific, you have to parse them out. I don't think it's all FANG names. I think when you look at some names like an Apple and maybe an Amazon, particularly on the AWS side, I think it's really where the softness is. I think when we look out into the next year, we see strength in software, in some of the next gen areas like big data, cybersecurity. And I think what's happened is a lot of these FANG names, they led it, and now they're obviously leading everyone down.
Yeah. Brent, Facebook put in a new low earlier today before a little bit of a bounce. What's in store for Facebook? Certainly has hurt a lot with its credibility with investors.
Yeah, I mean, investors are just fleeing because you have a massive deceleration in top-line growth as well as margins. So, I think that stock's on ice until we see the first half of the year. Most investors realize next year they've guided to basically no earnings growth. So most investors are now looking out to 2020. You get to middle of 19, you look at 2020 numbers, and you're trading at 15 times if the numbers hold. Even if numbers go a little bit lower on earnings, you're still talking about a high teen, low 20 multiple on Facebook. And again, I think if you look at some of the peers in the industry, they've all traded at 25 to 30 multiples. So clearly the multiple's been impacted. There's so many other areas to go to that show better fundamental support, like Amazon, like Google. So I think it's the second half of 19.
I'm looking at Amazon, Dan, as we speak. I'm glad Brent mentioned that. It's down 30% in 3 months.
Look, I mean, I think anything that has a touch of consumer, we've seen just massive downdrafts. And I think you're starting to see valuations fall out of bed. And I think the bigger issue is, investors want to be more focused on some of the pure play cloud. Like when you look at a Microsoft, we've seen more and more large cap tech money go to a Microsoft off of a Facebook, off of an Amazon, just given the secular trends. And I think they've been obviously a beneficiary here. But no doubt, look, there's a lot of white knuckles going into this earnings season, 2019 guidance, and FANG names are in the eye of the storm.